Thursday, the 21st of July 2020. Perseus Mining released their June quarterly report today. I think it was kind of on the neutral to maybe slightly positive side. So I'm just going to go through that report as I do with most of the quarterlies. If you're new to the channel, this one's going to be a free video that I put up on YouTube, but the majority of content on the channel is now on the Patreon site. Doing at least 2 videos a week at the moment, planning on doing a lot of videos for the ASX quarterly reports over the next couple of weeks. So if you're interested in more of this sort of content, join up to the page, and I'm planning on probably doing at least 10 of these quarterly updates for the main mid-cap ASX gold producers. So similar to this one, what I'm going to do now. So Perseus, as I said, I think it was kind of on the neutral side. I was a little bit concerned about this report. It's a stock that I hold at the moment, both directly and indirectly, which I'll talk about in a second. So it came out at about 65,000 ounces of production. If you remember, last quarter was probably the weakest I've seen from the company for probably the last 18 months at 58,000. So they're back into sort of this sweet spot sort of range, about 65 to 70,000. I think they were getting up towards 70,000. I think in the March quarter, the December quarter. So they still can't quite get these operations working at the top of their game in the same quarter. It's almost like Edikan underperforms one quarter to Singaway outperforms, and then they sort of reverse each quarter. It'd be nice to see them both get to their sort of the top end of what they're capable of. But still, the company's extremely cash flow positive at this point. You can see their notional free cash flow, $40 million US. The cost of production, $935 an ounce. The hedging position is pulling down the average sale price. I mean, I think the average selling price for spot in the June quarter was probably around $1,750 for most gold companies, or maybe slightly less than that. But Perseus only receiving about $1,550 because of their poor hedging, which I'll talk about in a second. I mean, the main reason why I'm a holder of this stock is the Yaouré development, turning them into a 400,000 ounce producer next calendar year, and then possibly 500,000 ounces in the sort of 6 to 12 months after that, depending on what how the ramp up goes. But you can see that their cash flow, they're cash positive at the moment. So they've got 164 million US in cash and bullion, and 150 million of debt fully drawn. So they've got 14 million in net cash, and they're producing about 40 million a quarter at the moment, and probably higher next quarter if they get a slightly higher gold price again, with gold at about 1820 at the moment. So I've said here, the cost of Yaouré capex is now largely covered by existing cash and cash flow. So they've got about 110 million US dollars to spend at Yaouré, probably over the next 3 quarters. With the net cash position at the moment, you're talking they're fully covered. They'll be net cash probably by the time that's fully ramped up. So that's an extremely good position to be in. Not many companies have that sort of growth project that's is close to production, and is going to make a material change to their growth profile to a higher ounces. So that's why I think the stock, I've been quite positive on the stock. I'm a long-term holder, sort of 2018, 2019, and going way back before that. I've been doing videos on this one for a long time. Rode it most of the way up here and sold it sort of in this $1.10 sort of range. Thought it was getting a bit overvalued when the gold price was only at sort of $1,550, and then I bought it back when we had the bounce back in March and April. So I think my average entry was almost where I sold it the first time, but I was happier with the gold price tailwind, and Perseus always does well with that US dollar gold price tailwind, being a high cost US dollar producer of gold. So that's always been one of my plays. And I also hold the stock through XOR. So I've sold a lot of my Perseus shares and now holding it through XOR, which is trading at about a 15% discount, I think, at the moment. If you remember, they've offered a takeover for XOR in Perseus shares, and the offer is for 12.8 XOR, one Perseus share for every 12.8 XOR. So you can see XOR's trading at about 10 cents or about $1.28 equivalent, and Perseus is trading at $1.48. So that's a pretty substantial discount. And I mean, there's a little bit of risk that offer doesn't go through, but I think it's worth paying. For me, it was worth getting that 15% sort of discount on the XOR shares. So that's one way of holding Perseus exposure at the moment. The two prices are tied together, and I think that offer probably will go through, but it's not a certainty. So there is some risk there, but it's hard to see how it gets blocked. I think that the XOR register's pretty open, and the board's fully supportive. I think the deal's going to go ahead. Perseus need some extra resources around Sissingué. So, like I said, net cash position there for Perseus, very positive. They're basically funding Yaouré CapEx at the moment from cash flow. This is a little bit confusing because it's in Australian dollars. They sort of move between the two. The Australian dollar's obviously strengthened a lot in the last 3 months as well, so they've got quite a large cash and bullion movement in Australian dollar terms, but that's just an exchange rate. Like I said, their hedging is not the best, but they've got 220,000 ounces of forward weighted sales contracts at 13.80 an ounce, and then they've got these spot deferred sales contracts at 15.74, so about 100,000 ounces there. I mean, it's not a huge position if you're thinking as a 450,000 ounce producer next year, roughly 450,000 in the 2021 calendar year. It's only sort of 3/4 of a year of production, which is probably less than a lot of the other mid caps have. And as that sort of rolls off, I think they said they were delivering about 50% into the hedge this quarter on the conference call. So about 38,000 ounces hedged and a 38,000 at spot of the 75,000 ounces they sold roughly. So they're probably getting rid of some of that hedging position quite quickly, as a lot of the ASX gold companies with relatively large hedging positions are trying to wind them down and get more exposure. I think the weighted average gold price they got this quarter went up by sort of $50. I think the weighted average of the hedges. So that's a positive. Gradually getting rid of it, and by the time they get Yaouré to production next year, maybe they're getting 3/4 exposure to spot prices as opposed to only sort of half at the moment. So that's positive there as they're gradually getting rid of it. I guess Sissingué, they've sort of put Sissingué first now because it's usually the better performer, I think. Higher grade there and lower tons. So I think they're processing harder ore, but at a higher grade. So they're getting a significantly higher grade than what they've been getting the last couple of quarters. 2.25 grams there, which means they get that higher production, but at a cost of extra milling per ton for extra energy costs and the lower throughput, but at the higher grade. So extra mining costs, extra processing costs, but all in all, still a lower cost of production, but not significantly lower. I mean, they were still producing at 750 at the last half with a much lower head grade, just because of the softness of the ore and the larger mining quantities. So it's sort of I think that's the mix that's changed a little bit in the last quarter. So now we're moving to a sort of more hard rock, and I think they're probably forecasting relatively similar production for the next half. I'll talk about the guidance in a second. Question was asked on the conference call, I think, about the block model. The CEO kind of said that it's not really an issue. It has been but they've underperformed on tons and grade relative to their model in the last quarter and in the last half. But he's saying it's sort of over the life of mine, it kind of weights itself out because they had outperformed previously last year in particular, I think. So now it's kind of going back the other way, but he doesn't see that as a major issue. But I like that they're showing this for a bit of honesty. A lot of companies don't do that. Once they start production, it's kind of this is what you get, and you're sort of trying to remember what it was actually forecast to be. So it's good that they're showing that for a little bit of transparency. As I said, the XOR Resources takeover, or they've called it a merger, but it's they've acquired that for the permits next to Sissingi. They need this resource because they've been drilling around there for a number of years and not found anything really significant. But it seems like Exor has got some decent resources at this the Bago project nearby. So I think I don't see how that deal falls over, but maybe I'm wrong there. But and maybe I got caught holding a bunch of Exor shares, but I see it as, for me, it seems like a relatively good risk reward opportunity if I want Perseus exposure to get them at a 15% discount. I was buying Exor shares probably in the last 6 weeks ago or so because I thought that deal would probably happen. So Edikan was probably where the problem was, or definitely where the problem was last quarter, and mainly because of the recovery. If you remember, the recovery was only 61%. They were processing higher grade material, but at a that had some metallurgical problems, so that really brought down. They tried to process too much of it, and it brought down the recovery significantly. So they sort of cut off the nose to spite the face almost at that, with the best of intentions, but it didn't work out well from a metallurgical perspective. So I think now they're reducing the amount of that Bakitsi ore in the feed, and so you're getting slightly lower grade but better recovery. So what they've said is they're going to, so you can see their big improvement in recovery, 76%. Question was asked on the conference call, and it was something I was thinking as well about, whether we're going to trend back up to this, what they were doing previously, which was sort of in that 85%. Consistently, I think for the last probably couple of years, they've been around that 80 to 85 number. So even this quarter, only 76. So the CEO sort of indicated that it was probably trending back up toward those numbers, but it doesn't seem like it's going to be there immediately. But he was fairly confident they were gradually getting that recovery back up, and they're still going to be processing all this Bakitsi ore, but they're just going to be. I think the original plan was to do it over the next, probably had another 3 to 6 months worth of it, but it might be longer now. But they're going to just defer a few of the tons so it doesn't impact recovery. It impacts it over times, but for each quarter it might only be a small impact. So that was probably the major problem last quarter, and that was my main concern ahead of this quarterly, that maybe that recovery still hadn't recovered, but it seems like it's getting back toward the sort of historical levels, which is encouraging, and that obviously brought down the costs significantly as well, back to something more what we're used to, around that sort of $1,000 an ounce US. I mean, Edikan's always been a high cost operation. Like I said, that's why Perseus has always been a pretty good exposure to US dollar gold prices on a run. They also had a bit of saving in fuel costs. I think I did a video probably 2 or 3 months ago now, talking about low oil prices and which companies probably do well in that environment. Perseus, I think I'd probably rate it as kind of a medium, given their medium to high exposure probably to oil prices, given the low grade of the ore and the large mining quantities that they'd have to truck a lot of ore. So they have quite a high exposure to diesel prices and oil in general. And they also said they got lower power costs. I think there's something to do with Ghanaian government response. Maybe there's some subsidies in place for power at the moment in Ghana. That's probably doesn't seem like it's something that's going to be sustained over time, but those low oil prices probably help quite a bit Perseus. So that was the production performance. I thought was much better than what we'd had last quarter, and back into when I saw the number, I was kind of relieved. I'd probably have too many Perseus shares for my, but I was kind of concerned about this report, that the stock had kind of a little bit of underperformance in the last couple of weeks, maybe same sort of thing. People are a bit cautious ahead of the quarterly, so it was down earlier in the day and then rallied later in the day. I think partly because just the general gold space was doing quite well, and the market in general was doing well today on the ASX. I think up about 2%. So that's not sure if it was too much. I think the result was kind of neutral, but maybe just the general gold price tailwind was helping all gold stocks. So that's all pretty promising for Perseus. At least the bad stuff looks like it's kind of out of the way, and we can get back to more stable performance and focus on the growth coming from Urea. So they've got, as I said, 100 million, about 110 million US dollars to spend there still. I like this again. I like the transparency here around what they've spent, costs incurred, and what the budget's doing. You don't see that often as well. So looks like that's all going quite well and all on schedule. Looking at first gold pour by the end of the year, so the December quarter. So that'll be a good announcement to see if that all runs on schedule. Exploration results. Won't dwell on that too much. They did have this one very, very high grade section at what's that, 3 kilos a ton at a permit near Sissingi. So that's a promising result. I mean, if they'd released that as a separate drill announcement, the stock might have gone up 10% like every other ASX runner on drill results. But it's only a small intersection there, one hole I think, so it's not going to do much. And they consistently seem to have some okay results near Sissingi, but never enough to really get a decent resource, and I think that's why they've had to jump at XOR. So all of that was, the same thing they're talking about. There's some reasonably significant results at Yaouré as well, talking about extending the pit there. I think that CSA pit, I haven't read that in full there, but CMA. So that's another thing that they get these little bits of exploration potential, but nothing much at Edikan and Sissingi for a while. Yaouré looks like it might have a bit more potential for growth with higher gold prices as well. So that was probably the bulk of it. I think the production performance, I didn't cover that there. They've guided for production next half around 140,000 ounces. I think at the high end, 125 at the low. So basically they're saying they're going to probably about the same for Edikan as this quarter is what they're forecasting, and for Sissingi as well. So 24 to 28,000 for Sissingi, and 39,000 to 41,000. So pretty much identical to this quarter. They're forecasting that out for the next 2 quarters, maybe slightly lower costs as well. Sissingi looks like its cost profile is probably trending into I think the real sweet spot of the mine life at the moment with that higher grade. So it should be a relatively stable performance, and I think that's the other reason I've generally tried to move toward Perseus as one of my plays on the US dollar gold price, because I thought that the production performance was more reliable than it has been, say, 3 or 4 years ago, aside from that last quarter, which is what kind of scared me going into this one. But it looks like things are relatively well back on track. And they talked about COVID-19 as well. I kind of gloss over that now on a lot of the ASX announcements, but I think looking at some of the maps in West Africa, I think it is a high risk that it kind of gets out of control there with a sort of lax medical system. They're not going to be able to contain it. So, and they've said here that a couple of employees or 3 employees at the Yaouré development were diagnosed. But the other thing is, in terms of West Africa, there are lots of different problems in these countries, and COVID-19 is probably not the worst of them. So maybe I don't think it's necessarily shutting down mines or anything. There's been less impact on some of the operations in West Africa than it has been on operations in South America, for example, where it's run rampant. But it is definitely a risk that this sort of gets out of control there. But then you really got to sort of work out what that's going to mean for production, whether the governments of these countries just let these operations continue. And that's been kind of the attitude so far from what I've seen. All they've really done is restrict flights and movement, similar to what's happened in Australia. But the operations of these companies haven't really been impacted too much. So hopefully that stays the case. But I can see a scenario where it might actually get out of control in these countries, and it's just really luck of the draw, I guess, at this point. So that's Perseus. As I said, I'll try and do a few more analysis, some timely analysis of some of the other quarterly reports that come out over the next couple of weeks, and upload them to the Patreon channel. Thanks very much.